Okay, I've got an appointment with Jeff Bush, the president of overflowworks.com. Let's see if I can catch him in his office. Hey, Jeff.
Hey, Brian, how you doing?
I'm good, man. So I own a mortgage company. I've got about $10,000 to spend on marketing. You're the expert in all this. What should I do?
So let's talk about that. Let me show you what I drew up for you really quick.
Okay, great.
So I wrote your question on the board here. So you've got $10,000 to spend. You're thinking about direct mail, and we're going to go through a little analogy on what I think we can do return on investment, what we should do as far as product type, mailing, and I'm going to have a few questions for you, which I would have for my audience here. So $10,000 advertising budget, if you're going to throw it at direct mail, just to make the math simple, I put in 50 cents a piece for a mailer. I mean, yeah, we have a couple guys mailing a million pieces that are down at 42 cents a piece, and I got guys mailing 5,000 pieces that are paying 72 cents a piece. So big difference in price, but just for math simplicity, I just put 50 cents. So we've got a budget to mail 20,000 mailers to spend $10,000. So what I like to go through with my clients is, hey, what kind of loans do you want to get? What loans do you make the most amount of money on? Is it FHA loans because you're banking those loans and you're making 4, 5, 6 points on them? So you want to market FHA because it's your most profitable segment? Or is it VA because you really are good at VA loans and your staff is educated and very good at talking to VA borrowers? Is it HARP? No appraisal, no DTI on Freddie from what I'm hearing, and unlimited LTV, Fannie Freddie. Do you have that product? Because we might want to look at HARP. Reverse mortgage loans. I mean, these guys that I'm doing marketing for are making $20,000 a loan for reverse. If you're making 20 grand a loan, we might want to look at that. Or do we want to just do regular old conventional, which is typically a little tougher borrower, a little less revenue per loan. So really, I talk to my clients about what types of loans do you want? Where do you make your money? What are you good at? What's your niche? And then we're going to look at what states you're licensed in and decide what's the universe of how many people we can mail based on the state you're licensed in. You might be licensed in one state, maybe you're licensed in 49, 50 states. So that all kind of comes into the question. But I wrote this on the board here to show you, the main marketing we do, 1, 2, 3, 4, 5 different loan types. And we're going to look at, what's your average profit or revenue on a $200,000 loan? Are you making 2 points, 3 points rather, on an FHA loan? So $200,000 loan, 3 points, you make 6 grand a loan. Some of my guys are making 5 points on these FHA VA loans, so that makes a big difference in this whole model. So I really got to get more information about where you're at and what you want to make the proper recommendation. But the true answer might be you might want to do all of this because you do all these loans and you don't care what kind of loans you get, you just want more loans. I want to do an extra 20 loans a month, 40 loans a month. We want to go from 1,000 to 2,000 loans a month. I just had that conversation in Orange County last week with a very large lender. So, just looking at the board here, we've got the 5 loan types. You got different revenue per loan. Now these reverse mortgage loans, if you're doing $200,000 loans, I know a lot of guys making 10 points on those loans, some of them 12 points, but maybe your average loan amount's only 100,000, so now it's 10 grand. So again, these numbers are going to change, but we're going to mail 20,000 pieces. We're going to show the response rate on each one. FHA, very saturated right now, pretty beat up. We're getting about a 0.4 response rate, so 80 calls on 20,000. The close ratio is high because there's no appraisal, no income, no FICO. Hopefully you have the availability to do no income, no appraisal, no FICO, because you're going to have a higher closing ratio. They're easier loans to get funded. So we're going to fund 10 loans for $10,000 spend on an FHA mailer right now. So you're at $1,000 a loan funded. If you make 6 grand a loan, that's $60,000. So spend 10, make 60,000. That's a pretty good return. 6 times return. You got to pay a loan officer commission. You got overhead, but hopefully this is all incremental business on top of what you're doing. So each one of these is a little separate. We're saying, hey, a VA mailer, we're only going to get about 60 calls. It's a 0.3 response rate, but again, a high close ratio, 7 funded loans. You're spending $1,428 to get a loan funded. You're going to make $42,000 on that same $10,000 spend. So if you're a big VA lender, maybe you'll do a little better than this. Maybe your revenue's higher. So all these numbers kind of adjust, and I like to do one-on-one once I know more about my clients. But we're going to go through, so HARP, HARP, you might only make 2.5 points on a loan, so $5,000 a loan. Response, same thing, about a 0.4. Closing ratio drops a little bit. Can't explain exactly why. I guess depending if you have unlimited Fannie and Freddie, closing ratio could be a little higher. But they still have to qualify for income, no appraisal, but it's a little lower closing ratio than FHA and VA because of the whole income and FICO score qualification, quite honestly. So you're only going to close 8 loans, so you're $1,250 a loan, you're going to make 40 grand. If you're a reverse lender, whole different ball game, and I probably shouldn't have averaged that in here because it's so different. But on a 20,000 piece mailer, we're getting 80 phone calls. You got to sell the whole family, sell the senior citizen and sell the kids on both sides of the family that you're not taking their inheritance. So the closing ratio goes way down, and these take a long time to close. 90 days because of counseling they have to go through. So this is a little longer term return on your money and a smaller closing ratio. But if you close 5 loans and you spend $2,000 in marketing per loan, it's $100,000 for a $10,000 spend. That's probably your best ROI. But not everybody has loan officers that can talk to seniors and know enough about reverse mortgage. The last one is your regular old conventional mailer. We can go after people that have second mortgages, adjustable rate first mortgages that are ready to adjust. People that are in 10-year interest-only loans where they're in their 10th year and that loan, their payment's going to double. Those people have to refi. So conventional's pretty good right now, but again, lower revenue per loan. A little bit lower calls, we're saying a 0.3. This is all pretty conservative. Do I have mailers getting 1% response? Absolutely. I could show you 10 guys that got a 1% response, but every once in a while we get a 0.2 response. So I'm kind of taking a real conservative average here and not blowing smoke like all the other mail houses and lead guys. 60 calls, you close 5 loans, you spend $2,000 a loan, you're only making 20 grand back on a $10,000 mailer. That's probably the toughest one. As far as ROI, but what if we did a blend of all of these things? What if we took your $10,000 and we spent $2,000, $2,000, two, and blended it? I call it my mutual fund mortgage mailer because you're kind of diversified. We could take, a combination of all this, and if we could make you, an average of $52,000 mailing all 5 of these campaigns. And again, you spent $10,000, so coming over here, average revenue per loan of $8,200. Obviously, this $20,000 on reverse is definitely having an effect in skewing your average a little bit. But if you could make $8,200 a loan and take 72 calls and close 7 loans, an average close ratio of 10%, you're looking at $1,500 a loan in marketing costs. You're looking at making $52,000 in profit. So that's kind of my initial impression of if you have 10 grand to spend and you're going to throw it at direct mail, we're a good company to do it. I've been doing this for 20 years. I know data, and I can advise you credit data, not credit data, triggers, mail pieces. We write all of our own copy. We build all of our own formulas. So we have the best data, the best mail pieces, best response. We're not going to lie to you about your results. We'll give you these ranges and look at what our target is. If you can make $5 back for every dollar you spend, is a pretty good deal. You might continue. We could start off funding 7 extra loans a month, and we can take this to like some of our large clients that our biggest client funded 1,000 loans last month, all off of direct mail. Top 10 mortgage lender in America. So we could do 7 loans a month, 70 loans, 700 loans. 7,000 might be a stretch, but we could probably get 2,000 to 3,000 loans a month funded off direct mail. There's people doing that. Quicken's doing it. So give me a call. Phone number is going to be shown at the end here. Send me an email. Let's set up a call and go through this for your company. Thanks.